What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is June 2nd of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to address a lot of the excitement and talk around Hong Kong and China when it comes to crypto, potentially with these two countries becoming more optimistic, whether or not we can see the spark of a new bull market. This has been the narrative that everyone has been championing really since back in April, and I want to spend some time to dive into it as we go throughout today's video, especially seeing how many of you liked the video I did recently on the topic of the Bitcoin halving event, providing my kind of positive and negative thoughts to try to give a realistic view about what this could mean for crypto. We've got a lot of things to dive into in today's video. If you guys happen to enjoy it, consider dropping a like, and let's go ahead and dive into it right after our quick sponsor. And our sponsor for today's video is Credo. Custody through the use of private keys, whether held by a custodian, encrypted on a hardware device, or hidden under your mattress, presents a massive security risk, a single point of failure waiting to be exposed. Today, Credo has launched its breakthrough distributed multi-party computation protocol with enterprise-grade security and governance solutions. New Credo offers a seamless and user-friendly interface while maintaining Credo's institutional-grade security. The platform offers a complete bird's-eye view of portfolios with intuitive charts that display balances and assets in a single dashboard, so you never miss a beat on your portfolio, and allows you to conduct all your core activities in Web3 from a single interface. Check out the link in the description below and see just how far you can enhance your crypto asset security today. All right, everyone, so let's go ahead and kick things off here. What is the narrative that we're being told at the moment? What are we being fed that's got a lot of people really excited? Because with every narrative, we have to approach it from a skeptical mindset. And more specifically, start talking numbers. What does this really mean for the impact of the crypto industry? As markets are a game of numbers, are there going to be more inflows or more outflows because of this news? So let's go ahead and talk about the two major developments that people are really excited about. First off, Hong Kong, back actually about a month and a half ago, so this isn't really new news. This has been something that's probably been discussed about, you've probably heard about before, is going to be releasing a framework that's going to allow for the first time in a pretty long period of time for retail investors to re-participate back within the crypto space. It's going to allow for a select amount of exchanges to acquire licensing and a legal framework to be able to operate within Hong Kong and offer investment services in digital assets like Bitcoin and Ethereum in Hong Kong for retail traders. So overall, again, positive development. I'm going to say that right off the bat here. There is no negating it. It is a positive development here for the space. And Hong Kong is on par with Singapore as being the financial hub of Asia. So this is definitely really cool. And Hong Kong's got a pretty good GDP per capita. There's a lot of wealth there. So this is generally a good thing. We'll dive into the numbers a little bit later, but just wanted to explain that it is allowing retail investors and traders. To clarify what that means, that is not with like retail stores or retail shopping. Retail traders or investors is a term utilized for everyday people. I would even say, again, at the end of the day, it's the vast majority of investors and traders, not the vast majority of per se liquidity and money, which we'll talk about later on, but the vast majority of market participants, people who do not meet accreditation status, either having a certain net worth over a certain level or a certain amount of income each year. Usually putting people in the top 1 to 2% of income earners that would be accredited. Okay, so the vast majority of participants now can start to re-participate in crypto. Definitely really good news. Outside of that as well, again, as we discussed, this has been talked about for some time. It's supposed to be going into effect here in June, so we'll have to see the effects of that playing out over the next couple of days, next couple of weeks. So we're living right in the middle of it now. But on top of that as well, there was another big development that came out back during May. And that was essentially when China, or the office in Beijing, had came out with a Web 3.0 white paper. This was a technical document that talked about China's not only problems right now with being able to tap into Web 3 potential, as well as other industries like AI and other types of web-based technologies, but their emphasis on wanting to be a part of this industry, wanting to have a footholding on these industries, and that essentially, no matter what happens in the world, these technologies are inevitable. It was a pretty overwhelmingly positive release, and this is definitely something to take note of in the grand scheme of things. I would say probably even more optimistic than the Hong Kong news, and we'll talk a little bit about that as we go throughout the video. So we understand that these are the two developments here, the Chinese white paper that came out for Web3, as well as the new developments in Hong Kong, allowing retail investors to buy crypto. Okay, so let's again just clarify here about the positives. As I mentioned, this is an overall positive for Bitcoin and the crypto space as a whole. There's not anything really negative that's going to come out of this. As China and Hong Kong have generally been essentially a negative weight on the crypto industry since the mining ban back in May of 2021. That basically was aligned perfectly with the top in markets around the 65K valuation. And on top of that, it's just going to allow for more capital to flow in this space. That is a net positive. But let's go ahead and try to understand here about the question of how much this can really benefit the crypto space. If we take a look at the economic metrics for Hong Kong, we can see that Hong Kong has a population of 7.5 million people and a GDP of around 382 billion. Now, it's important to note to focus on the typical GDP, not PPP, because PPP is referring to the equivalent GDP that's created, and therefore with the base currency and the purchasing power within the economy, how much is it equivalent to, say, GDP in the United States? You can buy a lot more for your money in Hong Kong. That doesn't apply to financial assets. So we need to take a look at figures like GDP, which if we divide it by per capita basis, we're talking about a couple $10,000 per citizen. That's pretty much in line with what we'd expect with a pretty rich area within Asia like Hong Kong. So if we take that kind of metric here, we just simply focus here on GDP. If we were to assume that Hong Kong now, due to this retail investor, kind of path to investing is opening up, and we take even a very optimistic scenario. This is an optimistic one at best. What if 1% of GDP was invested in cryptocurrencies? That would be $3.8 billion of investment inflows into the space. And again, positive thing for crypto. That would be really good. But the question is whether or not it can spark a new bull market. I'm going to keep coming back to that point here. And to be honest with you guys, as we talked about, the halving event for Bitcoin within an annual year is going to be removing even more Bitcoin than that. So I would say that this is not enough of a narrative itself. Hong Kong as a place that could now start to invest in cryptocurrencies, and more specifically, we need to discuss the distinction between retail and institutions. As we talked earlier, this is for retail traders to participate. So retail investors in many cases don't have the kind of liquidity that drives bull markets. What drives bull markets is a mixture of retail and institutional liquidity. If institutions have already been able to invest in the space, and trust me, while there are regulations, while there are definitely strangleholds by China on moving money out of the country, which is why the mining ban was put in place, if you want to invest in crypto and you are a well-known accredited investor, there are not many strangleholds that are going to prevent you from doing that. Money finds a way anywhere in the world. China knows this. The vast majority of countries know this. And because of that, we need to understand that this is likely not going to be the case. We are not going to see 1% of all wealth, not to mention a lot of that is in real estate and all types of other types of assets. Essentially speaking, you're talking about, half a percentage point maybe going into investments like crypto. And at that point, you're really talking about fractional amounts of money in the grand scheme of how big crypto is as an asset market. If, again, you start to see a 25% or 33% increase in the amount of people selling here going throughout this year when it accounts for the overall trading volume, these numbers become negligible and crypto prices can still continue to move lower. So this isn't some major inflow here. Now, I will get here towards the more positive potential event, and it's why I talked earlier about the potential what if we continue to see a positive trend, not just in Hong Kong, but in China. See, Hong Kong's focus on its crypto ambitions includes a lot of what ifs. Hong Kong becoming a crypto hub would be great for the crypto industry. It means more money coming in, more participants participating in the space. But the big question we need to ask ourselves has not to do with Hong Kong and its positive steps forward, but the white paper from China, the Web3 white paper that came out, and whether or not mainland China is going to be the next focal point for the crypto space. Could it be that finally China reopens investment services towards its over 1.4 billion people and a nation in which has a GDP of $19.373 trillion? Makes Hong Kong look like a blip on the map when you think about it. Right? So this is the real question here, guys. At the end of the day, and this is where, again, as you all know, we've been bearish on the crypto space. I will tell you guys, if China opens up investments to retail investors in mainland China. Same question kind of goes here, between institutional and retail. But put aside whether or not institutions have already been able to invest in the space. If retail investors can, in full swing, start to reinvest in cryptocurrencies, you're talking about sizable liquidity and sizable momentum. I would say look no further than the Shanghai composite bubble back during 2015. I remember I was trading during that period of time, and it was incredible to see how retail investors on such mass scale, especially in a small market like crypto, could really have a major impact. We saw that in 2016 and 2017 during the first bull market in crypto I was trading in. That has a major impact. And again, while China is not the only country that matters at the end of the day, having that swarm of liquidity could be really good for the crypto space. And again, to put things in perspective here about this kind of dichotomy between Hong Kong, right? A great example that's comparable to Hong Kong that already is available and is another financial capital of Asia is Singapore. If we take a look again at the nominal GDP, it actually has more GDP, almost nearly double that of Hong Kong, or at least about a 50 to 60% increase. So again, Hong Kong is not really the focus point here. And we have to go towards a bigger question here. This is the, again, this topic of the what ifs here, right? We've talked about, potentially there's certain amounts of liquidity that could come in. Maybe China comes into the picture here. But we really need to talk about really why this is going on. Why are we seeing this focus on, kind of Hong Kong becoming a crypto hub or starting to reopen up licensing? Well, we need not look further than here on the Wikipedia page to understand why Hong Kong might be taking more of a positive or loose stance, and even why China may be allowing for such a loose stance in Hong Kong. Because with Hong Kong being a financial capital and nearly 94% of its economy being broken up into services, which I know is kind of a broad term, but really if you think about Hong Kong, the backbone and really the growth driver for Hong Kong is financial services. And if financial markets and real estate, due to the collapse of Evergrande, are killing the sentiment in the real estate market, if you have global equities, albeit they're starting to tick up a little bit, but if you look at the Hang Seng Index, right, what's going on in Hong Kong markets, you can see why China may very well be allowing for other ways where money can start to circulate or enter into Hong Kong as a market. Equity markets are relatively weak right now. They have been trending down since 2018 after maintaining a steady uptrend since 2003 into 2018. We know that the housing market, due to the collapse of Evergrande and many other Chinese developers, are putting the real estate market into question, which has been really the backbone of investing in China for so long, where a lot of money flowed towards as an investment vehicle. And now China and Hong Kong are probably looking for some new avenue here to potentially, at a minimum, try to make up for some of those shortcomings in the near term, rather than it being a long-term trend. I can guarantee you guys, China does not want Bitcoin to be the investment vehicle long-term. But if anything, this could offer some kind of boon to the economy, both in China and in Hong Kong in the near term. Something that at least could bring investor and capital flows into the economy. Now, I want to go ahead and again, kind of close this off here, guys. The main talking points I want to emphasize are that Hong Kong is not really the focus point. Even if Hong Kong has a very positive approach and maintains this kind of testing ground for crypto trading for retail investors, it is not the story at the end of the day. The story here is mainland China, and whether or not we are going to see a 180 over the next year, next couple of years from China, allowing retail participants to invest in crypto again. If that happens, I'll be honest with you guys, that collapses a lot of potential of the bear thesis we've been talking about here in the channel. And again, I want to show, I want to be completely neutral here and try to be as little biased, as less biased as possible, right? At the end of the day, there is something to be said about that. However, it's important to note that there is nothing confirming that mainland China is going to be opening up retail investors to crypto. There's just no proof of that just yet. So there's trillions of dollars of liquidity within the GDP of the Chinese economy and mainland China. Again, is not completely open up to the crypto space yet. Institutional investors are not really the topic here. We're talking about retail participants. And again, coming back here to this fact that this has been discussed for about a month and a half and Bitcoin's price has been relatively neutral, I think we need to understand here that at the end of the day, this is still a narrative. It is still a narrative that we lean into, we hope for, and we believe is going to come true because we want to see the price of assets go up. But at the end of the day, guys, a lot of the narratives that people have been preaching, it feels like I'm in the twilight zone sometimes, because constantly we have been dispelling narratives here over the past couple of years, the narratives that are commonplace within relief rallies. The de-dollarization narrative that everyone was screaming at, the dollar itself is practically where it was in December 2022. It is not collapsing by any large extent. Not to mention, if you are talking about the whole BRICS scenario, well, the dollar has been gaining against the Chinese yuan since back here in January 2014, from around 6 yuan per dollar up towards around 7. And it looks like it's continuing to accelerate versus the trend back from 2005 to 2013. We have seen, again, the Bitcoin bank run narrative completely fall flat on its face. Bitcoin would not be pushing sideways here ever since back in mid-March if there was, liquidity rushing into crypto. Not to mention, these stablecoin on-ramps have shown no growth since back in October and actually declined since back in April 2022. And another important thing to understand is that if you are hoping for this to save the altcoin market, I got bad news for you guys. The only two major assets that are looking to really have widespread support here, at least in Hong Kong, are Bitcoin and Ethereum, really well-established liquid assets. And while that's good news for Bitcoin and Ethereum, it's not really good news for the broader range of altcoins within the crypto space, which have been really plateaued since back in June of 2022. So all of these things are important to keep in mind here. The question comes back, though, to whether or not we can see a spark of a new bull market off of this. And I got to be honest with you guys, while China and Beijing and the leadership of the CCP have been quite vocal about wanting to be at the forefront of these technologies, this is very typical of a nation like China that is fast growing, wants to be the cutting edge of things, do things bigger and better than anyone else, and again is also leading economic efforts like BRICS. The key point at the end of the day is whether or not it's going to actually play out as people are preaching. And right now we are getting the most optimistic narrative that everything's going to happen and therefore Bitcoin is going to go to 100, 200K, and it's just going to be as simple as that. No other fundamentals are needed, no other narratives. This is the narrative that is going to make Bitcoin go up and kick off new bull market. I got to tell you guys, it is sitting on weak sand here so far. Just because we got a white paper does not mean that we are going to have a new bull market just yet. We need to see a lot more developments, and I promise you all, you will see it happening in price before it hits the headlines. And right now, we're not seeing any kind of optimism right now outside of the headlines. Prices are relatively stagnant. If you guys like this kind of discussion, if you like this kind of research, if you like when I go through and I try to view things in a more numeric basis, I try to view things from a fundamentals perspective, as much as I understand that the narratives are definitely what drive markets at the end of the day, we got to understand whether or not those narratives have weight. And that's the question we need to answer. If you like this kind of content, I recommend you guys check out the Dash report down below in the description. We just dropped this month's report yesterday. A lot of people have been sitting in some positive feedback. It's a 20+ page report that you guys will get every single month. You guys will also get access to our momentum indicator, the blue-red indicator that we utilize here on the channel very actively on the weekly and monthly time frames. And on top of that, you guys will get access to our trade alerts group. You guys know when I'm making trades in the market. You guys will get access towards our discussion group, talking with hundreds of different members of the Dash report. It's a great way where you guys can support the channel. We create a lot of free content here 3 times a week, Monday, Wednesday, Friday. I eat, sleep, and breathe cryptocurrencies and the broader macro scene. I love financial markets, and I think at the end of the day, this is where you guys can really get that additional layer of passion, information, and hopefully be able to have an additional guide towards your trading journey as you guys make your own decisions, you do your own research. I hope it can serve as a good foundation. We've already got hundreds of members signed up to the Dash report, so if you guys would like to join them, we'd love to have you guys as a part of that family. But the link will be down below in the description, and you guys can get 20% off on the Dash report if you sign up for an annualized basis. So that's it for today's video, everyone. Thank you all so much for watching. Hope you all have a fantastic day wherever you are. And until the next one, I'll see you all in the next video. Take care, everyone. And if you like this video, consider dropping a like as always. Take care, everyone.